Hey guys, this is a market update. We are still in the midst of a huge bull market right now. Now, the sentiment is negative, but actually we're going to look at on-chain analysis here to show exactly what happens in bull markets, because you get drawdowns, but it's important to understand how the behavior works right here, because what we're in right now is a negative period, and these are opportunities for most of us looking to dollar cost average BTC, buy at lower prices, and wait a period of time. The time horizon is the most important thing, right? Even now, if we're thinking the next 12 months from here will be a bull market. So any drawdowns short-term selling from a government that within a couple of weeks, they'll be out of their Bitcoin anyway, that's obviously a great opportunity. So short-term, that time horizon between negative sentiment and a secular trend of a bull market, that's a great opportunity. Buying Bitcoin now, if you have an 8-year or more time horizon, buying something that is now 57K, where you think in 8 years time, it's just got this huge growth. Every year, the CAGR is around 40, 50, 60%. You just wait. Time horizons are important. Taking advantage of ridiculous short-term sentiment that's completely irrelevant is also important. We'll look at the on-chain to show us exactly this as well. So look, 50 is a massive level as a support, 50,000 BTC. You can see that here. If we go back to the previous bull market, you can see some resistance here. So look, 50 as, just a kind of broad level, 50,000 if it gets there. We touched, I think, once, maybe 51, 52. That's obviously an important level to bounce from. We're seeing some buyers come in. We're also below the 200-day moving average. You can see these orange areas here where we've actually hit this. Again, that's a bull market where you come into this and actually bounce and find buyers. We got a little bit overextended probably because of the ETF and a lot of exuberance there. That sentiment has now changed to a little bit of negativity. We're actually back to more normal kind of price action, which is probably pretty good, right? Washing out some speculation. It's all good stuff for legs higher. Prices don't really matter that much because the next 6-12 months just seem very, very good for BTC. So that's what we want to be in. If you do trade, check out the Bybit deposit bonus down in the description. If you trade on there, you can make a deposit, get up to $30,000 as a deposit and trading bonus. I'll leave that link down below in the description. Also, the Crypto Investor course has been updated. So if you have it, go and check out those videos. Those videos are free. I'll be putting the price up at the end of the month. I usually put the price up when I put new videos in, but I'll keep it down at the same price for the next month. So on-chain analysis, unrealized profit, unrealized loss. Essentially, we had a huge spike up here, and that was the ETF spike. So you get this big unrealized profit, and essentially people are now starting to say, hey, maybe I want to take some profits. So that's fine. You also got the Germany BTC, the Mt. Gox BTC coming in. So we're in a period now where we're not in that expansion, that price discovery. However, you can see bull markets have these spikes, and there isn't one spike and then you just go into another bear market. Each and every bull market, you've had 1, 2, 3, 4 spikes. Big drawdowns as well. Price discovery up to a high. Big profit taking drawdowns. Price discovery drawdowns. Profit taking is natural. It's what happens to people who've been in for 4, 8, or more years. So you can see that here. But each bull market, you don't get one. You don't just get one spike and then, well, that's the end of it. So in this bull market, 1, 2, 3, 4, 5. Here you had 3 or 4. So we get those. There's been one this cycle, and there's another 12 months or so in terms of if we're looking at cycles that we would expect some price discovery for BTC. So this is actually good. It's showing that we're in a bull market and we're testing those highs and essentially teasing sellers, right? Because a bull market is where people come in and they say, I want to put some more money into BTC. Can you sell it to me? They say, not at this price. So price discovery, push the price up. Are you going to sell now? That is how you get other people to sell their Bitcoin. So that is price discovery. That is a bull market, and that's what's happening. You can see that. This is short-term holder behavior analysis as well. And we are, if you see this, the short-term holder cost basis, essentially bull markets show this just generally rising over time as well, where the price is, just going through its kind of expansion, contraction. Down here, we are in a profit-taking phase. And in bull markets, you get these for a while. You kind of get those sellers out. Right, the price resets itself. People think, I don't want to sell at this price. I have to go a bit higher. So then you get another move. So this is just absolutely normal within Bitcoin. And a 30% drawdown from the all-time high seems very volatile. But we're up 100% from 12 months ago, more than 100% from 12 months ago. All about sentiment, short-term. Everyone gets way too into the short-term, FUD and fear and exuberance. This is just a very normal price discovery phase for this asset. realized price breakdown, as you can see here as well. Bit of negativity, right? But once you get these big expansions, you're going to get profit taking because people are getting puffed in and saying, look, I want to buy your Bitcoin. I've pushed the price up. Oh, now you're willing to sell some. And we know that obviously the selling sentiment from the governments is pushing some negative sentiment, but it's literally irrelevant over the long term. MVRV ratio here, 28.5% of trading days have recorded a higher value than this. Also shows we're in a bull market, right? So during this, you get these big spikes during the price discovery phases. You don't get one spike, you get 1, 2, 3, 4. We've had a little bit of a peak above, you can see here, but a drawdown, that would be a really terrible bull market if we just get that and then we go. It's not that way, right? You can see the macros changing. That's a very long-term thing. And so this bull market has more legs in it. These are the drawdowns that you get in bull markets. The absolute sweet spot for any trader, for any investor in any asset is where you get this sweet spot where you get a price drawdown within a larger secular trend. So you can, again, the time horizons doesn't matter. This bull market should last for another year. So we have a drawdown within a year bull market. If you're buying now, or even in 6 months' time, you're just saying, I'm buying now with 8-year time horizon, the thing grows at 50% a year. So there's a price, and then there's a secular trend and a time horizon. The sell-side risk ratio right here shows us that this is one of those events where it's a fairly large price drawdown from a high, right? So only 5% of trading days have recorded a lower value. But we are in a secular trend to the upside within a bull market. So it's the sweet spot. It really is. We're not in a bear market. The macro isn't going into a bear market. Yes, there may be a slowdown in the economy, but we know that Bitcoin reacts to central bank policy. That's all going to become easier. Very volatile. You can get some drawdowns. We all know that. But the state of the market right now is that central banks are going to be easier, and that's usually pretty good for asset prices, right? Currency debasement, etc. So we have a price drawdown within a bull market. Short term, it's a sweet spot. Or if you're just a long-term investor, buying the asset that has 50% annualized growth and waiting a decent amount of time for that growth to actually play out. In terms of the macro data, most of this is showing softening in a lot of areas of the economy now, faster than was expected, or at least faster than the Fed were expecting or predicting. Now, the Fed always gets everything they say wrong, and it's not because they're dumb, it's just they're playing a different game than us. Their job is to manipulate our behavior, to make sure that we're doing things that are required to keep GDP high and prevent the system from collapsing, right? So during the pandemic, they said there's an unlimited amount of money at the Fed. Go out, we'll helicopter you money because they can't have the system collapsing. And of course, things get overdone, so they've drawn it down again. And they're going to tell everyone that they'll never cut rates and that unemployment is never going to tick up. That's manipulation short term to get the things done that they need to get done. But they know that that's not the case. So now we're seeing unemployment tick higher than they were predicting, faster than they were predicting, right? It's the manipulation. So we're seeing that come out. And once that data shows that it's at a level where they're comfortable, they'll obviously cut rates. But the rate cuts aren't relevant. We're in crypto here. We're growing at 50 to 80% a year for crypto. All of this is really not that relevant if you're a long-term investor in crypto because you're just outperforming most other stuff. So it's only relevant if you're looking to maybe trade cycles or maybe take some profits at the peak of a cycle. The reason why this is bullish, obviously this isn't bullish, right? Investors cutting back purchases of housing collapsing is not bullish. But it's the reaction that we get from the central bank and the government. Because what happens when everyone's house prices draw down is that the government bails them out, either through the central bank or through policy, spending policy. They always do that because the government is us and we bail ourselves out. So Bitcoin is protection against profligacy of society itself, always bailing it out because we know eventually that we actually own the money printer. Because when things go south, we just say, we're going to vote in people that are going to print money and help us out. So this is it. And it's really the long-term trend of the government spending more money than it has. And so it needs to create more debt and or get the central bank to help them out by printing money eventually through these cycles. These are long cycles. And so that is a secular trend of that happening, currency getting trashed. We have to be in assets. Bitcoin is the purest play here. This is employed, usually work full time. We're at a level now, the red zone here, where this is every recession previously to the 80s and below. So this would signal a actual recession. Now, whether that's going to come out now, it actually gets shown as a recession years later, but you can see that, jobs, full-time jobs are at a level now where every previous recession has been. A lot of the jobs that have been created are government jobs. So the private sector is getting crowded out. This is the inversion of the yield curve here. The black line is previous recessions. We're now at the red line here. So again, historically inverted. This is global policy rate hikes. Again, 0 rate hikes in June around the world. So what we're seeing is softening in economies, softening of investor activity. This is all the backward-looking data, right? Bitcoin has already priced a lot of this in because it prices in the future, whereas a lot of this data is looking in the past. But what we can see now, central banks are catching up and saying the drawdown that we had in activity, economic activity, has happened. And so we're not raising rates anymore, right? We're seeing all of that data come down. And so we're not hiking rates. And obviously the cutting cycle is kind of upon us, right? So that's what's happening, is that essentially this data is showing inflation is kind of over. Economic growth is very, very slow and sluggish. And so that's obviously not bullish. But the reason we're in assets is because we know that they can't let the system collapse. They have to keep spending more than they're actually earning, which eventually leads to some sort of currency debasement, buying back the bonds of the government, because otherwise the interest rate rises as there are just simply fewer buyers for the debt, because they're saying, well, your debt's unpayable, so we need a higher interest rate. That makes the debt worse. So the whole thing is trying to keep a lid on that, which is impossible. And the outlet is asset prices. Global inflation tracker, pretty low, around 2%, which is the Fed's target. So we're almost there now, and they're still at 5% rates. So there's a long way to go down, I think, for rates and policy in general. 3% inflation, but there's a lot of disinflationary forces here in the US, including renters indexes, which will be coming down a lot over the next maybe year or so. And then it looks like the market is pricing in a September rate cut. We're seeing some of the publications kind of pump this out as well. So the Fed, again, manipulate behavior. They're starting to pump out September rate cut narratives. The rate cuts are pretty irrelevant. 5%, 3%, 2%, it doesn't matter for Bitcoin and crypto. We're growing at 50 to 80% a year. It just doesn't matter. But we're in a bull market because the central banks are being a lot more, or the next 12 months should be a lot more dovish for central banks. They're not going to do helicopter money like they did in the pandemic, but easier policy from central banks. We're in a bull market. Buy dips in bull markets, buy Bitcoin over the long term, dollar cost average it if you're looking out at least 8 years or so, because this is the outlet for unaffordable policies. So get a deposit bonus on Bybit up to 30K. The crypto investor course has been updated as well. Link below if you haven't got that yet. I'm James, it's Money's EG. Cheers for watching, and I'll see you in the next one.